He is a expert in venture capital, especially software and telecommunications. He's currently a partner at Seven Rosen and serves on the board of a recent startup, Tango, which is a
well, actually, Tango is not a recent startup. We started that company in 1999. It's a recent IPO.
Okay, recent IPO.
I serve on a couple of other companies. One is a company called Invoto in Austin, which is a private company. Is trying to promote the use of video for e-commerce, and it's a pretty fascinating little company. And then I'm on a company that in Memphis called Verified Person, which does background screening, uses software to kind of automate that process. And I was an entrepreneur many years ago, and most of my time I spend out at University of Texas at Dallas, the Institute for Innovation and Entrepreneurship. I'm the executive director of the program out there, and I'm on the faculty there. And I'm also, when they don't know it, I'm on the faculty at SMU. We teach, for Jerry White, I teach entrepreneurship courses. So, I think Will thought that maybe some of my institutional knowledge about venture might be of help to y'all. And I'm not necessarily here to enlighten you about anything other than to maybe answer a few questions or to give you some thoughts about how institutional investors think about innovation, how they think about entrepreneurship, what some of the, maybe oftentimes unless you're in the environment, you don't, you got to learn how to think like the other guys do, because we all think the way we want to. And so understanding how they think is always an important concept, and trying to sell whatever it is you want to do in terms of a new innovation or starting your own business. So I don't know if you want me to just ramble or is there any way to, anybody want me to, I want to ask me a question to kind of get this thing kicked off. Oh gosh. Okay, and what is your name?
My name's Cam.
Cam?
Yeah.
Okay, Cam.
That's short for Campbell. So I read a book on venture capitalism.
Oh, and you're an expert.
Oh yeah. And the thing that I find interesting about it, because I didn't have much of an idea how it all worked, but the thing I find interesting about it is the author of the book said that a venture capitalist should be prepared to invest people in something they believe in. So you don't just go and ask them for money. You ask them for expertise if you're missing expertise, or for coordination, networking. That they add a lot more than just money to the mix. So
well, that is sometimes the case. Look, money. If they don't bring anything but money. And when you're out trying to raise money, what you hope to do is to create competition for your project or your deal, right? And so then what you hope is that you're going to be able to choose amongst a number of investors. And what's going to be the criteria? Everybody's money's green, right? So you hope that they have some expertise that you're going to be able to leverage. Maybe, and so what I tell people is that if you're interested in starting a restaurant, don't call me. I have no idea how to start a restaurant, right? So you want people that know the landscape, and also recognize the opportunity like you do. So if you come to me and you say, hey, I've got this software opportunity, and I've kind of been around the software space a while, I'm kind of going, yeah, you're right. And they get excited alongside it. Now, here's the other thing is that, what we try to do is we try to offer contacts. So that's the other reason, like, okay, so who can you put me in touch with, Jack? Well, if you're interested in knowing the CEO of Citrix, yeah, I can help you. If that's somebody that you want to meet or interact with, or you want to meet the IT manager at Dell or somebody like that. So that's very important. But oftentimes the entrepreneur comes in and doesn't have a lot of a team, and so if you're honest about it, you say, look, I need some help with this. We have at Seven Rosen, we have a venture partner that is what we call our talent partner. So he has this virtual bench of all these people. Now, we can't just go pluck them in and put them in your deal, but hopefully we can say, hey, Phil, there's this other deal Cam's doing. Why don't you come in and take a look at it? Would you be interested? And then the chemistry between you two have to be good, right?
Mhm.
We can't just insert people into your company.
Mhm.
But the other thing that you need to be aware of is that we also become very interested in how the company's going to be run, and so we may want to have a pretty large say in who's going to run it. And so the little dirty secret about founders and being CEOs is that about half of them lose their job within 2 years of funding.
Yeah.
And that's a shame, and that shouldn't happen.
I think that a lot of us would quite cheerfully hand over a lot of that kind of stuff to people more qualified than we are to do.
Sure, but some people, here's the way this conversation normally goes. Hey Kim, okay, we're going to fund your company, and we think you ought to run it until we start to get to this point in the evolution of your company, and then we'd like to bring in somebody who has a lot more experience. And you say, okay, yeah, just write the check, please. Okay, we write the check, and then when a year comes down the road and go, Kim, it's time. I really like being the CEO of this company, right? Yeah. And so all of a sudden it becomes a pride thing. And what you want is to be able to say, look, I'm going to build this company with the expertise that I have, and I'm going to let somebody else take care of the other stuff. And more importantly, I'm going to learn from that person. So that's kind of the way it goes.
Assuming,
Wait, what is your first name?
oh, Dave.
Dave, right?
Dave, yeah. Assuming that a person with experience with a concept, with an idea is considering approaching you, there's a range of time or development between an idea and a completely patented, ready to market, or in the market already done sort of product that needs expansion perhaps. What point is venture capital most useful or most sought after? When is it wise to go after it in that kind of range of time?
Well, it's, any of those times. So what you need to understand is that when I'm talking to a venture guy or gal, where do they like to invest? Do they like to be raw, early stage, seed, what we call seed, which is a seed investment is generally so we can get somebody to quit their day job and go and develop the concept a bit further, or to do a little bit more market research. So we'll give them a little bit of money and say, okay, let's see what you come up with. But remember, venture people don't like to take risk, unnecessary risk. So if you think that they're gamblers, they're not. They'll take calculated risk, but they want to understand and validate as much as they can about the product, the technology, and the customer, and the marketplace. Now, you can get fooled a lot by that. I don't know if you guys remember this, but I had an investment in a little RFID company, and Walmart had mandated that their top 100, 200 suppliers were going to go to RFID instead of barcode or whatever it was, and that didn't work out so well. The market never developed, and so those companies struggled. So as much as you can validate what you're doing, and the most important thing is that I've only had one company, or I've seen one company in our firm where the technology didn't work. The most common mistake is that the customer really doesn't want it. So how much interaction you have with the customer, how you develop that kind of marketplace thought is really more important than anything, because nobody cares that you have a great widget. What they want is a customer who wants to buy it. So if you're developing something in your mind and without getting a lot of input, then you may be developing something that is only good for you. It's kind of like my son. I have a son that used to come to me and he'd say, Dad, I got this great idea for soccer moms. I said, oh, well, tell me about it. I said, have you talked to any soccer moms? He says, no, but this would really solve all their problems. I said, how do you know their problems are? And it's not about what he thinks, it's about what whoever's going to buy it thinks. So, any other questions? Yes, sir. What's your first name again?
My name is Doug. I guess the question, and maybe at a different point than these other folks, is I'd like to kind of have you sketch out very quickly, a typical VC involvement. Otherwise, like, a person gets involved, they make the contact, what do they do to validate, What do, you know, what's typical that they give up? And I know there's a big range of stuff.
Okay.
But what would be the most common scenario?
Okay, so look, I think what most entrepreneurs think about is, look, when I go in to see this guy, I better have everything just, you know, got to have a great pitch, have on my, you know, shine my shoes, got my best boat, my best tie on, you know, no. What I would really like to see is, let's come in and sketch it out on the whiteboard. Tell me what you're thinking about. Because now, not everybody, I'm an early stage, not everybody thinks that way. If you're a private equity, you're thinking about the financial part of it. But if you spend a lot of times on your business plan thinking about how it's going to play out financially, you're wasting your time. Because here's what I know, is that whatever plan you give me is wrong. Okay? Remember, starting a business is a series of experiments. Run the experiment, because your mindset's going to change as you get more knowledge about, you know, as you get into the market or as you start to developing your product. So come in and let's whiteboard it out. Let's talk about what the possibilities are. And so if a good venture guy will say, okay, take this, our discussion, and come back and tell me how you kind of think about that. And how you know, start to think about the marketplace, or how you're going to get this done, and then what venture guys like to do is they like to do milestone funding. So let's say your project's going to take $20 million. I don't want to write you a check for $20 million. That's death. So I tell you what, tell me where you're going to have a value creation milestone. Okay, I'm gonna develop a prototype. It's gonna take me $600,000 to develop a prototype. Okay, to go develop the prototype, and let's look at it. Let's get plenty of customer input, whatever, and then now let's go to the next stage. So when I make an investment, I'm gonna budget an investment over a number of years. So I'm gonna start off small, and as you succeed and grow, I'm gonna increase my investment, and hopefully I'm gonna have a syndicate partner. Because I don't like taking the risk all by myself, right? So I'm going to ask another venture guy, or you may be out getting competing term sheets from other venture people, and we may start to collaborate and put the squeeze on you or something. We don't really do that, by the way. What we like to do, because this is all pretty formulaic. I mean, you know, I'm not going to get Negotiator of the Year by squeezing you out of a couple of points of your ownership. It's pretty well understood what is expected, and so at a first round funding, not at a seed, but at a first round, the investors, not just me, will likely want to own 50 to 60% of your company. And that's several $1 million in investment, you know, 2 or 3 or 4 million, or whatever, you know, depends on the project. It's not where you start, it's where you exit, and importantly, it's if you need $100 million for your project, a venture guy won't do it if he knows that going in. Because the exit is what determines his payday. And you guys may remember this, but in 99, 2000, we had companies going public for $1 billion that had no revenue. Well, I can put a couple $100 million into that deal, right? Well, when that goes away, and then we went through this valley of no IPOs, and that's how we really make money. We'll sell companies, we'll IPO, but unless it's you know, you've got to look at it and say, I've got to have a very capital efficient project, and if it takes $15 million, that's, you know, 10 to 15 is a really capital efficient. But what makes it capital efficient is that if I can put 10 to 15 in for $100 to $200 million exit on an M&A, you're not going to go public for that. And you need to know who's going to buy you, who's going to want this. Now, you don't need, you know, and there's no way of guaranteeing that, right? But if there's no logical buyer, then what's the exit? And so the other thing that I think is important is that when we take 50 to 60% of your company, it will only grow from there, okay? And so you want to be prudent, you don't want to raise a lot of money, you don't want to get diluted, but there's a point where we can't take more of your company because then you won't work there, right? I mean, if we get to 80-20, that is the limit. And the only time we get to 80-20 is when it doesn't perform. We have to keep putting money in. There's a thing called a ratchet where, you know, if you sell stock for a certain price and the company doesn't make progress, isn't able to promote a higher price because of the progress they've made and it goes backwards, then that starts to happen, and that means there's, things aren't going like you hoped. But the kind of the boundaries are about 50. The venture guys are going to get 50 to 80% of your company over time. Not going to get 80% on day one. But also remember that voting thresholds about what gets done in your company isn't set by 50% ownership or 60% ownership. It's set in your corporate documents. You set those thresholds. Like 2/3 of the shareholders vote means that this will happen, a sale or something like that. There are different classes of stock, and we probably ought to talk about that too, since you brought this particular question up. Is that when I invest, I'm going to buy preferred stock, and I'm going to give you common stock. Now, why do you think that's a good idea? Doesn't sound like a good idea, does it? Why?
Preferred gets paid first, right? Is that it?
Preference?
Yeah.
Okay. So if you don't, what happens is, but there's a really good reason for that.
Yeah.
Is that if I buy preferred stock, then what that means is that on an exit that's probably not optimal, I'm going to get my money back first. Okay. Why is that good for you? Why is it good to have common versus preferred?
I get voting.
Huh?
I get voting.
You get voting?
Well,
We'll decide in the corporate documents if you get voting. But the good news is that but here's how I get you your sweat equity. What happens is if I buy preferred for $1 a share, if I have that preference, which means that I've got $8 or $5 million of preference in front of you, I can sell you common stock or give you common stock options for $0.01 a share. And what happens is that and this happened in the company that went public last year, Tango, is that what happens is that when a company goes public, all the shares get converted to common. So my preferred shares, which are no cumulative dividend, they all convert, because the preference has a little meaning then, right? It all converts into common, so what your penny stock then starts to converge on the preferred price. That's how you get your sweat equity. You get to pay $0.01, I have to pay $1. Okay? So that's kind of how that works. And nobody will give you all your founder stock all at once. They'll want you to vest over time. Now, if you have a substantial invention that you want to fund for a business, then you can get some of your founder stock. You can say, I want to be vested 25%. But if it's pretty much a business plan, you're going to vest over 4 years like everybody else, because what happens is you get vested, which means all your stock accrues to you at once. That means that you don't have any stake in the game anymore. Not enough. You need to be vesting as the company matures. Now, did I answer your question?
Yeah, I think you hit a lot of the things that I thought that we would need to know right off.
The venture guys, believe it or not, they are honorable normally. They won't steal your idea. They're not going to sign an NDA. So if you could walk into a guy's office, gal, and say, before we talk about this, you need to sign this NDA. Ain't going to happen. Now, that's for a pretty good reason. Is we see a lot of deals, and it would tie me up pretty severely if I signed an NDA on everybody walked in. So you got to trust them. I've only seen one example where I thought somebody swiped somebody's idea, and it was one of our competing venture capitalists. We were competing for the same deal. They didn't get the deal, so they said, I thought it was such a good idea they'd go fund their own team. That's the only time I've seen that happen in a lot of deals. But it still comes down to execution. You got a great idea, so what?
How much venture capital goes on around Dallas?
Not a lot. There was a time when there was quite a bit. The venture industry has gone through a lot of changes. In the 90s, there was a lot of money made in venture, and so all this money poured into venture. In the 90s, nationally, there was about $3 to $4 billion a year that went into venture from the LPs, which LPs include endowments, universities, family offices. In 99 or 2000, I'm going to get this wrong on the year, but there was $100 billion went into venture. And then and it tailed off slowly. Now this this year, maybe next year, it'll be about 10, 12 billion. The problem, and you can think about this, is that there were probably in 2000, 6,000 new companies formed, and a lot of them chasing the same idea. And that's not a good thing, right? What the analogy I use is that if you were a real estate developer and you were at an intersection and there were 4 buildings on that intersection and they were all empty, who's going to make money? Nobody. If there's one empty building there, he might make money. So too much money came into the industry, returns dried up. The firm that I work for, we've not raised a new fund in several years because nobody wants to invest in venture like they used to. So what you have to do as an entrepreneur is that you have to go and get some angel funding, find folks that believe in your idea, help you develop it further, and then you have to find, there are some venture firms in Texas, not many. You may have to go to California. And in fact, you may have to move your business to California. I had a friend of mine who came into our office. I said, we don't have any money to invest. We're just taking care of our old companies. And he found Norwest Ventures was the one to invest, but they said, we're not going to fly to Texas all the time. You got to come to California. So he moved his family and his company to California. And that happens a lot. Let me get this.
Oh, yeah, sorry.
What's your name?
That's Paul.
Paul?
So this is a question over email that kind of relates to that question. The question is, how does Dallas compare to other regional tech VC startup boom areas like Denver and Boulder?
Well, Will was mentioning Denver and Boulder, and Denver has never been known as a hotspot like Silicon Valley or New England, Boston. New York has gotten a lot bigger. Austin has always had, although the big player down there, Austin Ventures, has kind of moved upstream into private equity. So Denver I don't view as a big venture capital mecca now. They have a couple of active firms there, and I don't know how big their funds are. But Dallas has clearly moved down a few notches in terms of available venture money. But by the way, most venture capitalists, if you're in California, you think about investing within a short commute of your office. In Dallas, we've never thought that way. We thought, we're going to go anywhere and find the great deals. We think about what technologies are available, where are the best entrepreneurs, let's go there. So it might be, we have investments in Chicago, we have investments in New Jersey, we have investments in California, we have investments in Israel. So we think about investing in terms of, we have a thesis. Most venture people will develop an investment thesis. What do we want to invest in? We develop that thesis, and then it's not about what walks in the door, it's what do we go find? And where are the best entrepreneurs for that? And it just so happens, as an example in Austin, there are a lot of great RF component guys down there, with Silicon Labs. So we invested in Javelin Semiconductor that's doing a CMOS power amp. That's a hard problem, but it's a big payoff if you can do it. So that's kind of the way we think about it. And so the social media guys are going to be really keen on what's going on in California because that's where all social media is going on. But social media is going to run its course. We have plenty of social media, all right? Any other questions?
Have we asked the intellectual property question?
Haven't yet.
Okay. One of the big things that came up the other night was kind of the worry that how do you protect against, in a group like ours, somebody coming in and saying that was my idea and sort of getting you for the intellectual property issue?
Well, okay, as you know, in our patent system, that's changed recently. It used to be first to invent, now it's first to file. So you can file a provisional patent fairly, inexpensively. It lasts you about a year, I think it's a year, before you have to move it to full application status, which is much like most of the world is today. I mean, the United States was, a little bit different. That, if you could demonstrate that you were the first to invent, it didn't matter who was the first to file. So if you have a good idea, it's good to keep a notebook, but it's also good to get out ahead of it with a professional in that way. And look, I'm not gonna, look, you're not gonna wield a big weapon with your patent as a startup company. Entrepreneurs will come in and say, Google is violating my patent. I'm gonna take them down. Okay, yeah. Well, they got 100 lawyers, and you got nothing, right? And patent litigation is very expensive. I mean, just to get to the Markman hearings, it's probably $1 million. That's just to determine whether you have a legitimate complaint.
Right.
So, but patents are valuable. You should do it. They're expensive to get patents done if you have a good legal firm. But at some point, that patent portfolio, what will happen, I was on the board of a company called Wayport, and we had a patent that we didn't think that we were monetizing enough, and so we hired a firm to help us auction that patent. And what we did was we put together a little book and we sent it out to 45 large companies, not little companies, large companies, Cisco, Juniper, you name it. We said, we're going to auction this patent off. Well, what do you think Cisco decided? They didn't want Juniper to get it, right? Or Juniper didn't, So all of a sudden, where we couldn't monetize in the past because we were little, they saw the value of, and remember, Google bought Motorola for their patent portfolio. So it has value, but don't think that you're going to go out and start, people that you think are violating your patents are going to go knock them off the horse. Ain't going to happen.
Just a question along those lines. If you were to, I know this is not going to happen, but if the value of a patent was inversely related to the size of the company that held it, so Google and Apple's patents were not worth very much to them simply because they're such big companies. But for small operators, those patents were more valuable, if that was the way the law worked. Do you think that would help the situation at this stage? Because at this stage, we just got this ridiculous thing of these people fighting patents over the shape of a device and the color of a device, and the colors themselves have been patented.
Well, the biggest problem we have with patents is in the business process area, business method. The internet kind of lends itself to that stuff, not a design patent or not a utility patent. But believe it that the guys sitting over at TI, they're reviewing patents all day long to see what everybody else is doing.
But the value of that patent to them is, only a company like TI can actually exploit the patents they have.
Right.
Smaller people cannot, which is the point that you just made.
Yes.
But if you were to turn that around and make TI's patents essentially worthless to them, they're a big enough company, they've got all that leverage, but if you could make their patents worthless to them, but it would be,
well, that's never going to happen.
I don't know if it's never going to happen. I think it's inevitably going to happen.
Okay. I would, Cam, you and I'd have to bet you a beer on that one. Okay. I don't think that would happen, but if it did, then I think in business today, I don't think not having a patent stops them from doing what they want to do. And so what happens is that TI is a great example, is that if they get into a pinch, they do a workaround, or they modify whatever they're doing, or they trade their intellectual property to be able to use somebody else's, right? That's why having a large portfolio. Okay, because everybody violates everybody's patent. That's fact. So, okay, you're violating my patent, I'm going to give you a license, and we're going to swap. That's what it's valuable for.
Makes sense. Do you want to answer some questions? Well, actually, to go ahead.
Well, we have one right here.
Oh, go on ahead.
Okay, so I'm David.
David?
I'd like to ask you a question about how you see the state of VC right now, and let me give you a little bit of background for that. You
Okay.
alluded to some of it earlier. So in the 90s, and I've been with a couple of companies that got venture funded, some of it IPO'd. In the 90s, VC money was fairly hard to get. You had to do a lot of work for it, and you had to have a fairly serious, in the early 90s, fairly serious proposal. I was with Parametric Technology, PTC. They took, I think, 13 VC pitches before they finally got funded, and they became, almost $1 trillion company eventually, in terms of the net change in value that they built for people. Then we went through the late 90s and the
The
early
nuclear,
2000s.
the nuclear winter?
Money was just stupid, right?
Oh,
Just crazy.
I'm just talking about the 2000s.
No, yeah,
Okay,
you're getting
okay.
it, right.
You're now the late 90s, yeah.
Right. So late 90s, just money was stupid, and
Yeah.
you know you get people on your board that would need you to do just crazy things like take a enterprise software company and pitch it to the consumer because
Yeah.
that was going to be big. And then we went through the valley of death, and now what I hear from younger entrepreneurs is, you know, they want to figure out how to get into Y Combinator and things like that. They want to figure out crowdfunding. Nobody seems to really be sure what the state of VC is. You've got a lot of social media, a lot of consumer-oriented stuff. Enterprise software, you know, is that still actually making money? What's this landscape look like to you now?
Okay, so when you describe the early 90s, that's the way it ought to be. It shouldn't be easy to make money. Okay, so making money the old-fashioned way, working hard, having venture guys work harder on the deals, having entrepreneurs work hard. When money goes easy, nobody makes any money. And in the 90s, just to give you some perspective, the average number of IPOs was probably 300 to 400 venture-backed IPOs per year. In this last 10 years, there was 1 year, I think there were 4 IPOs, venture-backed IPOs, and one of them was probably Google, and they really skewed the numbers. So what will happen is that, as an example, Seven Rosen, challenging what we call, you know, our 99 and 2000 vintage funds were challenged. Are we going to return capital to our LPs? 99, those are write-offs. 2000 fund, you know, I was concerned, are we going to return 50% of our capital? We're not going to make anybody any money. And then we had this little IPO called Splunk. Splunk went out at about $3 billion. And so all of a sudden, I'm feeling like maybe we'll make some money and fund, you know, that vintage fund. So what will bring venture back into place, like any other investment, is when people start making money. People are going to make money again in venture. Now, it may take a few years to flush out all the bad will. But see, what happens is there's this herd theory. Everybody ought to be investing in venture today that gave it up, because now's a great time to invest. But they're going over here to other things that are popular, and there's going to be too much money there too. So I think the state of the venture industry is at a very, very low point, but doing this. And if I were going to live long enough, I'd probably get into it again. But you know, when you get into a venture partnership, and you know that's a 10-year minimum commitment, and usually about a 14-year. You know, I'm not 18 anymore. So what I'm doing is I'm a partner in 3 funds, and I'm working my portfolio. And what I do now is I try to make personal investments. So I've got a personal investment in a little company in Carrollton. I've got a personal investment in the semiconductor company in Javelin in Austin. And that's how I'm. And by the way, when you know, it's an interesting phenomenon, and I'd hate to admit this to LPs, but I think I make more money when I make personal investments than when I invest other people's money. Now, why is that? I don't know. Yes, sir.
Is there?
What's your first name?
Greg. So you were talking about the percentage of companies that typically would take ownership, 50% to 70%. What for that money? Like, let's say that I came to you with a thing that you wanted to invest in, and said, you know, we needed $3 or $4 million for it for 50%, and that deal went down. What is there limitations on what you would consider good use of money during that time period? And then the other portion of that is when I mean good use, I mean like, is it salary, hiring people, you know, paying salaries as part of that, or is it just prototyping, or what can that be used for? And then the other portion of that is when you take 50%, okay, and let's say the voting shakes out that way, what's your active involvement in that specific company? Is it weekly, is it 3 times a week, or is it, you know, I see you every 6 months, you know? So those are the kind of 2 questions,
Okay.
I guess.
Okay, so First part of the question was
Use of money.
use of money.
Use of capital.
Okay, so we don't expect entrepreneurs to work for free.
Okay.
Okay, I mean, you can't do that, right? You're not, and then you're worried. In fact, if you're working a day job and you're asking me for money so you can just do this on the weekends, I'm not interested. Okay, because you're not totally committed. I want you totally committed. Now, we did have an entrepreneur who got funded, and he took some of the company money and he went out and bought a Corvette. He lost his job. Okay, so we want you to spend the money on getting to that milestone. Okay, and we're gonna monitor. We're gonna have monthly board meetings. We're gonna have a lot of interaction. The companies that have the best leadership have less interaction. Our job is to help you, and what you should do is be willing to accept the help, because we have pattern recognition. I've been on 20 boards. I've seen, if I didn't, when I was an entrepreneur, I made a lot of mistakes. If I didn't make those mistakes, I've seen them. So I've got a lot of scar tissue. I want to share that with you. Listen, and don't be arrogant. Don't tell me that this is what my teenagers tell me. Well, that's never going to happen to me. Right? Yes, it will. So, if you haven't been there, and look, most entrepreneurs, has anybody in this room been a CEO? Maybe, but not very many. I wasn't, when I started my company, I had never been a CEO of a company. I didn't know what I didn't know. Okay, so take the mentorship, invest with people, or work with people you trust, and then you won't have any problem. Make it my problem. When you have a problem, make it my problem.
Okay.
Because here's what people do at these board meetings. Here's what everybody thinks. I'm gonna give you the good news. I don't give a shit about the good news. Tell me the news, right? Because then I can't. If you don't tell me what's going on, I can't help you. And if you hide things, because I don't want to show them this, because then they're not gonna like that. This is kind of like going into your dad with your report card. I found out quickly if I'd go in and say, Dad, I'm really struggling with this course. I just don't, I'm doing my homework. Well, what do we need to do? So, but if I just gave it to him, surprise, what'd he do? Man, I was grounded for 6 weeks. I mean, so I started to work that system. But so, if you have a problem, make it my problem, and then we'll work on it together. And you'll do a lot better that way.
Okay.
Yeah. Anything else?
I'm not sure if you know what we're kind of trying to do here. It looks, as a group, we're kind of putting together something that will enable each other, or enable whoever chooses to do so, to kind of launch, to kind of get going, take their concept forward, gather, kind of draw on each other's experiences and so forth. Do you know of other organizations in the Dallas area that do that? Okay.
Well, no, you're a unique organization, but okay. So there are a lot of organizations that are trying to accomplish the same end result. You have a really unique. You got a lab here. You got a lot of stuff. You got a lot of bright people who are interested, who are investing their time into helping each other. But I was not aware that you guys existed. And I'm pretty active in the community, Tech Wildcatters, and I'm on the TechXchange board. In fact, I'm the new chairperson of the board of TechXchange. Now that doesn't mean anything except they fooled me into thinking I wasn't going to have to do anything, and that's not true. At UTD, we run a certificate series, and you don't have to do the certificate, but on I think it's the second Friday of every month we have an entrepreneurial development series that covers a different range of topics. It goes for 9 months, and I think it's it may be like $90 a session or something. You get breakfast and lunch, and you get guest speakers, and you get the faculty who have all been entrepreneurs. Because the thing about being an entrepreneur is there's not always been a lot of formal education about acting entrepreneurially. And most of us come from big companies, and so if we've been engineers in big companies, what we are really focused on is sustaining engineering. If you are an entrepreneur, you can't do anything sustaining because nobody will buy it. You have to make dramatic. Your innovations have to be significantly better. Okay, because if Apple had come out with another candy bar phone, it would probably be successful because of Apple, but it was so successful because it was such a departure from what Nokia and Motorola had done, right? So there are a lot of little things that you might know intuitively, but until you kind of, yeah, I know, yeah, you're right, you know. Because, you know, people inherently don't want to change their behavior, you know. And so you start to think about, you know, some of the big failures in American business, like, why in the world, how did Netflix kick Blockbuster's ass? It was Blockbuster's game to lose. They had a brand, they've been around forever. How'd that happen? I'll tell you how it happened. That, you know, they had a real estate department, right? And, you know, the real estate department is the hammer looking for a nail. And Netflix is over here thinking, you know what? By the way, you build your innovations on the backs of others. There was a guy in Ohio. His name was Vickers, and early on he had this goo that used to take soot off of wallpaper. And as people moved away from these furnaces that created all these coal burning furnaces, his business started to deteriorate. Right? Nobody needed this goo that would remove the soot from the wallpaper, and so he gave his this goo to his sister or sister-in-law or whatever, who was a kindergarten teacher, and she took it down to her kindergartners and watched them start to play with it. It was more pliable than modeling clay, and she said, you know, if you would put some color in this thing and call it Play-Doh, it might be a hit. Any of you ever used Play-Doh when you were a kid? That, you know, it's about taking something old and making it new. Okay, most innovations are not new inventions. They're repurposing technology. They are taking advantage of technology that exists. A lot of innovations have been business model innovations. That's what Netflix did, right? A number of Google, new business model. I mean, Google's success is not about technology. It's about an advertising paradigm that didn't exist before. So don't always think about, you know, I'm going to make, you know, because I'm an engineer, I can have superior chip speed, and, you know, that might help, but what's in it for the customer? And the customers don't like to change. So
The question I had was, I'm going to turn this back on you a little bit here.
okay, sure.
All right. This guy comes in with this stuff that he wants to repurpose this stuff that takes soots off of wallpaper. And we don't have anything called Play-Doh anymore. And he comes to you with that idea. What would have been your reaction?
I don't know anything about that stuff.
Okay. All right. So, but would you have sent him, would you have been able to provide them with maybe contacts, or how would you, somebody walks in like that, you just say, I mean, what would be, is there anything you could help that person with? I mean, I'm thinking, I thought you were going to actually suggest Gooby Gone when you said that,
Yeah.
but anyway.
Okay, well, there was another gentleman who, I don't know if you remember this, but the battery-powered lollipop.
Okay.
Okay, so he sold that product to some toy company, you know, for a lot of money. And he was thinking about, when he knows about, you know, he had offshore manufacturing, he had, you know, small things in motorizing. And so he went on this big search, and so he went into Walmart and he saw the, you know, the Braun electric toothbrushes and the manual toothbrush, and there hadn't been an innovation in toothbrushing in a long time. And he looked at the replacement blade business, and he thought, you know, 30-something bucks to replace these brushes. Do you think there's any margin in that business? And so the difference between those two products was about the size of the Grand Canyon, right? So he comes up with his own, you know, so the irony is, here's a guy who came up with a battery-powered lollipop. To rot your teeth is now going to use a battery-powered toothbrush that was inexpensive. It wasn't the manual, but was not the expensive Braun, battery AA powered or whatever it was. And that was his next concept, building off of what he already knew. He knew about efficient manufacturing, he knew about small, you know, little motorized, you know, whatever. And so he went on a discovery. So I'm not. So to be an entrepreneur, you have to be aware. You have to be engaged. And so this is a great forum for seeing what's going on, right? I mean, if I'm sitting on my rocking chair at home, I'm not seeing what everybody's doing. So you got to be active. You got to see what everybody's doing. You got to recognize things. You know, remember when you develop an innovation, it's not going to stand alone usually. It generally has to work in a network or an ecosystem, right? So how does it fit? And if you're doing something proprietary that Cisco or Intel or somebody doesn't recognize, you're not going anywhere. Because you're not going, you know, unless it's just stupendous innovation. So what happens is that people pick out the void in what Cisco's doing. And remember, every market starts off as a niche market. It's never a big market. Otherwise, the big guys would do it. BlackBerry, they started off as a niche market. Okay? Who were the original users of RIM devices? They were corporate people, right? Business people. Now, everybody in here has a smartphone, right? Yeah, BlackBerry lost the market. The point is that every innovation will start off because there are early adopters, or people who like innovation, who will take the risk. There are a lot of people who don't. You know, kind of the late majority. They want all the, you know, they want the whole product. You know, they want all the service. I remember when we started Wayport, you know, and it was really hard to get people up on wireless because the computers weren't configured good, and you know, and Intel kind of came in and helped us, and Dell kind of helped us, and everything kind of came together. Because when you were traveling, you wanted to use broadband and depend on, you know, a Wayport type service. You had to depend on others. So think about those things. You know, and if you have a great idea, test it out before you take it public. Test it out before, you know, go test it with customers. If you have a customer that says, you know, if you solve a problem, you know, being an innovator is about solving problems. If there's not a problem to be solved, how, you know, what do you got, right? Yes?
Do you start off with like a price skimming high or low cost? What would you say for your products originally up front?
Well, okay, so look, there are a lot of different strategies to go after the marketplace. That's, you know, having the lowest price, is that one of them? Lowest cost? Is that what
I
you're
think
talking
it's
about?
flooding the market with low cost products, I think, is
Okay.
price skimming.
Okay.
And then you move towards like
Okay,
more.
okay. Well, okay, I'm going to give you something you need to think about. So if you were going to start a hardware store, do you think you could be the low cost price leader?
No.
No. Who owns that market? Home Depot. Okay, so here's the way you go after it. I have a friend who has a lumber business. He has a redwood lumber business, because when you go to Home Depot, they have a broad selection, but it's not very deep. You want redwood lumber, you're not going to find a big selection of redwood lumber at Home Depot. So he doesn't have to be a price leader. He can take his little niche, and he can, because
More of like a luxury type market.
well, I think
Niche.
I think if you're solving somebody's problem, it's okay. What is the deal? Is it you're solving their cost problem? And by the way, that's not a bad strategy, is to be the low cost provider. But don't think you're going to be the low cost provider forever, because if you're small, a lot of people can beat you. And in the end, that is you need to kind of. There's some industries you don't want to operate in, right? I mean, how many of us would start a new car company today? Okay, well, then check out Carbon Motors. You ever looked at Carbon Motors? Okay, it's a specialty, purposely built police car. Now, why are they doing that? If you go look it up, you'll find out. But no, but that would be the only, and I don't know whether they'll ever be successful, but you're not going to, Tesla, is that going to be successful? But you're not going to compete with GM. You're not going to keep. There are too many car companies, and nobody makes any money. You're not going to start an airline. You're not going to start a hardware store.
So it's the marketing channels.
You got to do an industry analysis. Is this an industry I want to play in? Do they make money? Okay.
some of those companies like car companies, they're in trouble because their business models were not good and they stuck with them too long, and other companies have come in with more.
You don't think
efficient.
it's because it's very competitive?
In some ways, but you take GM making this plethora of different models, it's been an embarrassment to them. They've had to cut down a lot of those models, and other companies that are leaner and more focused. Another one is Virgin Airlines that just came in from nowhere, and they managed to become a major company because the status quo was so ripe to be.
Okay, but yeah, sometimes the status quo it's a good idea, but that's an element of risk. Okay, because there have been a lot of airlines started that didn't make it. And I'm just saying, if you're going to go compete with those guys, cost may not be the right way to go if it's a big industry and it's a troubled industry. Yeah, somebody have another question?
You had a question, please.
Sure. So getting back to something you said earlier, the test market and such, how do you do that without public disclosure if you were going to seek a patent? Is there any way to do that without public disclosure?
How do you test your market without disclosing the products that you've got and giving your edge to someone else?
Because you only have a year after public disclosure before you can file the US patent.
Look, don't worry about it. I mean, go. You know, look, we can't live under a mushroom, right? And so you got to share your stuff with people, and you got to trust them. And so I'm telling you, you don't. A venture guy won't sign an NDA, but if you go into a customer, and all they're doing is buying stuff, many times they'll sign NDAs if that's what you want. I'm just saying, don't let that be what stops you, because you may have a product, nobody ever signed your NDA, and you're never going to go anywhere, right? Yeah. So get it out there. In fact, most companies come out sometimes too soon, but they publicize what they're doing because they want to get reaction to what they're doing.
Sure. And so is there any benefit to doing like provisional patent applications and such?
Yes. Yes, I think so. Just understand that you're going to have to do something with it in that year's time frame. And by the way, remember patents. It takes about 3 years to get a patent granted. They're good for 20, so they've got a useful life of 17 years.
Well, you got patent pending during that time. So.
Yeah, but that part is part of the 20 years.
Yeah.
Yeah. Yes.
Have you seen groups like ours that have done well in innovation and sort of new business creation? And do you have any sort of words of wisdom for activities that we should engage in?
Okay, so you guys have a unique brain trust here, right? You're interested, you work hard at this, so something is going to happen here, right? How long will it take? I don't know. If you've been to some of the other kind of incubators, at University of Texas at Dallas, we have a venture development center where we take university technologies and we house them over there, and we hope that we can commercialize what the professors are doing. That doesn't hurt at all. I mean, but don't expect a lot, but expect that this group is going to be a resource to everybody, and that should help you. Yes?
So you kind of touched on a couple of things, one being that you hadn't heard of us before,
Right.
and the other is that you guys are typically out there searching for things to invest in rather than somebody walking in the door. What would your advice be for, making that happen for us?
Okay, so
becoming a better
I told Will that I gave up my honorarium to come tonight, because this is what I do. I slum around with guys like you to find deals. Okay, that's how you go find them. You can't stay at home. So you make people aware of what you're doing. You have some, you get a little publicity. You get, somebody comes up with a really cool idea. You get somebody from the Dallas Business Journal to go sit in that chair out there in the little shooting gallery. see what he thinks of it, right? I mean, you know, you kind of, you're living, you know, you're over here off of, what's the name of the street?
Lady Bird. Yeah,
Huh?
Lady Bird.
Lady Bird, you know. I mean, we were driving over here and I locked my door, right? So nobody knows that you know, maybe you know it exists, right? You get your website is kind of a wiki, right? Okay, and which is cool. I like that, but you know, I don't know what it means. And your name, it used to be Hacker. What is it, Hacker?
Yeah, it's a Dallas Makerspace.
Makerspace. How did you come up with Makerspace? I don't understand what that means to me.
They had a pre-existing culture nation.
Well, it's a
Worldwide.
growing culture, I'd say.
It's a what?
It's a growing culture.
Okay.
Worldwide, it's kind of.
But it existed before we created it.
Well, no, but the thing is if you've got momentum in other places, that's a good thing to have,
Yeah,
right?
yeah.
Right. No, but I was just never aware of it. So I'm you know, tech wildcatter. So what you have to do is you need to plug into the ecosystem. So if you all are working for big companies, you're not going to see other entrepreneurs or other you know, you need to plug into other events, other venues where you rub shoulders with other entrepreneurs, other, you know, finance people, whatever it is. Because you know, if this is your club, you need to expand it. You need to go outside of your club.
Tech Exchange, Tech Wildcatters, other bigger clubs out there that you've recently slummed with?
So Tech Exchange is a great deal because if you're an entrepreneur, you know, you can come to these little meetings. You can meet other entrepreneurs. You can meet, you know, you can meet finance people. You know, what they've done is they've tried to minimize the number of service providers, you know, lawyers, insurance people, accountants, and so you just start to be a part of that fabric, just like you're a part of this fabric. Okay, so you are a subset of that in your club here, and then you know, you want to take opportunities to educate yourself a little bit more about what's going on, which is what you're doing now. You know, Tech Exchange had they were in cooperation with either MIT or the Thai guys when Guy Kawasaki came in. Guy Kawasaki, I don't know if you remember, he was the kind of the original Apple Macintosh product manager. Became a venture capital. Now he's an author. You know, he was out here at Las Colinas. And there's you know, a lot of people who are interested in startups and entrepreneurs. They're out there, right? So the Regional Dallas Chamber is putting together a calendar of events. The City of Dallas is doing one, I forget the name of it, but there are a number of initiatives that are trying to make you aware of what's going on. And so you need to play, I mean, how many other deals do you guys attend? Anybody attend anything else?
I started
Occasionally the Tech Wildcatters.
Huh?
Occasionally Tech Wildcatters.
Occasionally. I mean, look, I can't make everything, right? I mean, so you got to have to pick out some stuff, and you know, if it's an interesting topic or an interesting venue or something, you know, you just kind of have to, you know, plug in. Are we out of time?
You know, we actually almost are. I turned off my phone to save battery, but now I'm checking it.
It's about 8 o'clock.
It's what?
It's about 8
o'clock.
o'clock.
8 o'clock.
If it's about 8 o'clock, that's about time. If you guys have any other
I mean,
questions.
look, yes, sir.
At what point do you like to get into an enterprise? When the guy just has the idea, or once he's put his life savings into it?
No, I don't want to, what I would rather do is get in early before you've exhausted your resources.
Shouldn't put your life savings.
So that if there's some way that I can help you, that you know, if you've, you know, you're out of money and you're desperate, I can't help you a lot, right? So if you and by the way, if you want to talk about your project, all you got to do is email me. We can meet over at the Galleria where my venture office is, or we can meet out at UTD where my other office is.
You don't like coming down here?
I can meet you over here, but generally when you're asking me to do something, you got to come where I am, okay? Because it's just you know, here's the interesting thing is that I am so busy And I thought that when I would tone down my activities, I wouldn't be so busy, right? But I'm really like running all the time. And sometimes it's between places, but I'm happy, if you want to show me something, hey, I got this prototype I want you to see. Yeah, let's take a look at it. I'll come down.
Great.
Yeah, we got one more.
Do you think, how often do you think, okay, so as a young engineer, how often do you think getting into a startup is a good deal for me? If it's not my own company. Like, I've heard standard practices to give someone like a nickel or like a very small percentage of the company as an engineer just getting in on it. What I'm asking is, do you think I should get into startups or established companies? That question.
I can't believe you asked me that question. Look, by the way, a big company, I started off in a big company, and I think if you can take it for a while, you do it, and you start to develop contacts. But I think what happens is that we used to, anybody here ever work for Nortel? Okay. You know what I used to say about Nortel or Motorola? Anybody work for Motorola? Okay. If you'd been there for 10 years or longer, they probably corrupted you. You know, the detoxification would take way more effort to get you away from that big company atmosphere. And so, if you want to get in the environment, go to work for a small company. They have generally they have a greater need for what you're capable of providing, because they don't have a big, they don't have an HR department at recruiting. You can go to our website. Any of our portfolio companies will generally post their jobs on our website. So I think you try to get into that culture as soon as you feel comfortable. But if you like working for, my son went to work for Cisco, and he got to be a real drag for him, right? So he went to work for a smaller company, and he likes that a lot better. So he didn't stay at Cisco very long. And so now, whenever he looks at opportunities, he's looking at smaller companies. Which, by the way, I think as an individual, you can make a bigger impact with them. You can turn the ship. You can do a lot of things that you feel better about in your own contribution. But I wouldn't tell anybody to leave a good job or anything unless they just have passion about it.
All right, guys. Let's go ahead and thank Mr. Kimzey for his time and generously driving out to Walnut and 35.
You know, I live north of LBJ. Oh. Yeah, so I don't ever come south of LBJ.
What is your website?
I tell you what, let me.
Can we get a?
If you give me a card, I can take a picture of it and send it out to the group.
Or just send them my email.
Nah, I'm gonna do it this way.
So if you email me, I'll probably respond. I will. If I don't lose
Go away.
Well, no. Hey, look. If it doesn't get caught in my spam filter, and I never mind talking to people or meeting with people. It's just, what I always ask is that if you're like, as an example, if you want to start a restaurant, I'll come eat there, but I ain't going to invest in it. Okay. So if it's something I understand and know about, I'm happy to, because that's what I like. I like to be involved in stuff that I understand. Okay.
And just one quick clarification, I'm not sure. What sort of things are you interested in and that you invest in and know about?
Well, okay, I've got a wireless background, I've got a telecom background, I've got a software. I like software as a service. I don't like, I like, stuff that you do in the cloud. I'm not a social media.
So do you want to join Makerspace?
What is it?
The Makerspace. He was asking if you want to join.
Well, does it cost anything?
Yeah.
Oh yeah.
Oh,
Yes.
$50 a month.
Yeah.
I don't think you'll qualify for the starving hacker rate.
Okay. I'll think about it. How's that?
Is there any opportunity for a venture to fund a group in such a way, like we're talking about, we're talking about everybody in this room and everybody's trying to look at ventures and talking about seed money. Is there any seed money funds for opportunities for groups whether for yourself or other ventures that might be willing to do something like that.
I don't think I understand your question.
I guess what I'm saying is that there are a lot of people in this community, in this room, that might have ideas, or they want to work on prototypes, things they want to try on the weekends or whatever, but may not have their own means or whatever to work on. And so as a seed money, you said, was a way to say, hey, go try it and come back with something and see what it is. But there may be some interesting opportunity if it was like a more formalized group with membership to seed that organization with funds that was kind of redelegated into R&D.
I don't know. The answer I would give you is that if you wanted seed money, the best thing to do is try to reach out to some angel groups.
Okay.
The angel groups are kind of organized, but everybody kind of makes their own decision.
Okay.
And
Kickstarter.
I was kind of interested in this crowdfunding thing, but I don't. I'm not.
Not sold on.
Yeah, I just don't know. I haven't seen it work yet. I mean, there are situations out there that may work. I haven't seen it work yet. I mean, there's probably not any. That are substantial.
What if it were a specific project?
A specific project. Yeah, I don't think anybody wants to. Like if I were to walk into this group, I'd be kind of intimidated, right? I'd be like, you guys bikers or what, No, I'm kidding you. My point is that the group thing. If you were all working on a single project that you wanted to promote, that's more interesting. I mean, is that what you're talking about?
Yeah, I was just.
Yeah,
exactly.
So single projects, and so what we've talked about at Seven Rosen is some of the other partners and I is that we'd like to do some seed investing as a partnership group. So if there's an interest, and there are guys there that have varied backgrounds, and they all like to stay plugged in. So if you have a specific project, shoot me an email. We'll try to develop it, polish it, whatever it needs to be done, and then if it looks like it's got promise, and we'll try to introduce it to some of the angel groups or somebody who might have some money. But remember, people look when you take a seed investment, they're expecting that to go to the next stage, even though it may not. And in our Fund 9, we had 36 investments, and 20 of them started as seed, and probably half of them didn't go beyond seed. And here's what, and by the way, as entrepreneurs, when you get a seed investment and it's for more discovery, if it's not going to work, you want to cut it right away. Because I've backed companies where the CEO stuck with it for 10 years and it never went anywhere. Now you guys are all pretty young. Okay, maybe you're not so young. But if you waste 10 years of your life working on something that doesn't work, you don't want to get blinded by it's my idea, I'm going to make it work, right? So, all right, guys. All right, thanks. Appreciate you having me.
Thank you.